questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Harsh Pathak from Emkay Global Financial Services Limited. Thank you, and over to you, sir.
Thank you, Alaric. Good morning, everyone. On behalf of Emkay Global to the Q4 and full year FY25 earnings conference call of Aditya Birla Real Estate. I would like to welcome the management and thank them for this opportunity. We have with us today Mr. R.K. Dalmia, Mr. K.T. Jitendran, Managing Director and Chief Executive Officer, Birla Estates, and Mr. Snehal Shah, Chief Financial Officer. I shall now hand over the call to the management for the opening remarks. Over to you, gentlemen.
I'm R.K. Dalmia. Good morning, everyone, and welcome to earnings conference call for the fourth quarter and financial ending 2025. As you all know, at Aditya Birla Real Estate, we have been on a journey of streamlining our company to build one of India's largest estate players. And in that context, financial year 25 has been a landmark year. This year, the company has taken further steps to reorganize its while delivering superlative growth in its core real estate segment. The board has also approved divestment of its pulp and paper business, which further sharpens balance sheet and management focus towards real estate and will lead to long-term value creation. I am sure you must have gone through the financial performance, so I can directly move to highlight our real estate business. The Indian real estate market continued to demonstrate resilience and steady growth, supported by stable macroeconomic environment, rising urbanization, and evolving lifestyle aspiration. Projects with right products, right location, and trusted brand names are continuing to witness healthy traction. In parallel, there is a growing emphasis on sustainability and innovation. Green building practices, energy-efficient design, and smart infrastructure are increasingly influencing both buyer preference and regulatory frameworks. These are all parameters that we have built in our business model and portfolio, apart from being guided by strong return guardrails. In Q4 financial 25, the real estate business performed exceptionally well with stellar sales at our 3 new projects and 2 new phases launched across NCR, Bengaluru, and Pune regions. Booking value doubled on the year to rupees 5,738 crores. Collection too grew by more than 100% to rupees 1,073 crores. For full year financial year 25, the booking value more than doubled to rupees 8,087 crores on the back of our 7 project phase launches. Our collection increased by 100% year on year to rupees 2,706 crores. The number of units sold and area sold per square feet grew by 3 times versus financial year 24. The revenue for the year grew by 11% year on year to rupees 1,157 crores. Added projects having GDV of more than 25,000 crores, taking the total GDV of company close to rupees 70,000 crores. These numbers speak to our strong business momentum and trust our customers, partners, stakeholders have placed in us. Importantly, the Birla brand has been a key success factor in our accelerated journey. This year, we have also elevated brand visibility like never before. As the principal sponsor of Royal Challenger Bengaluru in IPL 2025, we took the Birla Estate brand into millions of homes. The impact was both emotional and strategic, amplifying our reach and deepening our brand connect. In other updates, we have raised $33 million with Mitsubishi Estate Company for the development of Birla Evera Bengaluru. This joint venture is a strong vote of confidence from one of the largest, most respected global real estate business investors. We will explore such opportunities going forward. Building on all these levers, we also strive to achieve over rupees 15,000 crore in next few years in annual pre-sales. And in the backdrop of such a strong business execution, we are equally proud to have also been conferred the prestigious Golden Peacock National Quality Award for the year 2025, becoming the first real estate company to be honored in the last 6 years. As we look ahead, we are gearing up for the next stage of growth. We are exploring the redevelopment space in a meaningful way, which we believe can unlock asset-light deals for us. We are also exploring expansion of our commercial real estate portfolio, which opens new annuity income streams and bring us closer to our vision of being a holistic real estate platform. Given all the factors I've just listed, I believe our real estate business is very well positioned for sustained and high quality growth ahead. Now moving on paper segment. As mentioned earlier, Board of Directors of ABREL approved the divestment of the paper business through business transfer agreement, envisaging a slump sale to ITC subject to consideration of rupees 3,498 crore, subject to achievement of certain conditions precedent. We expect the divestment process to conclude by Q2 financial year 26. With that, I will now conclude our opening remarks and we can start the question and answer session. Thank you, gentlemen.
Thank you, sir. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Karan Khanna from Ambit Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity and congrats team on the strong growth in sales, launches,
Karan,
collections.
please go ahead with your question and unmute yourself in case if you've put yourself on mute.
Hello, am I audible? Hello?
Karan,
Hello?
are you
there? Yes, am I audible? Hello?
Since there's no response from the participant, we will move to the next participant. The next question comes from the line of Akash Gupta from Nomura. Please go ahead.
Hello. Hi, am I audible? Hello. Hello. Hi, am I audible?
Akash, please go ahead with your question.
Yeah. Hi. Congratulations on the great quarter. Sir, actually, I had a couple of questions.
Since there's no response, we'll move to the next participant. That is, the next question comes from the line of Amit Srivastava from B&K Securities. Please go ahead.
Hi. Am I audible?
There is a problem in your line, boss, it looks like.
Yes.
Okay. Ladies and gentlemen, please stay online. We will see if there is an issue and we'll get back to you. Thank you.
stay. Give me a notebook.
Yeah, I put the music line on because who checked up first after the participants are not audible. I announced and I put the music line on. The next question comes from the line of Amit Srivastav. Please go ahead.
Yeah, hi. Congratulations on good set of numbers. Am I audible?
Yes, please go ahead.
Yeah. So congratulations on a very good set of numbers in terms of the pieces, the way that we have achieved during the year FY25. So now I just want to take it forward for the next year. How are we looking at the pieces number? And given a context, we are planning to launch around 14,000 crore of GDP across 8 projects during FY26. So if we can give the sequencing also that how these planned projects are going to be launched over the next fiscal year, and what would be the guidance for pieces as well as the project additions for the FY26?
Yeah. Thank you, Amit, for your question. So as we mentioned, we are planning to launch around 14,000 crores of new launch phases or new projects. Largely, this is decked up in the Q3 and Q4. There may be a couple of launches we are trying to get into Q2. But since it is all largely skewed towards the latter half of the year, I hesitate to hazard a guess on the guidance number for this year. What we are largely looking at is on a more 3-year plan in which our aim is to reach around 15,000 crores in about 3 years' time. I think I'll be more confident talking about a larger horizon of time rather than giving you a very short-term annual guidance. Because of the reason that so many factors are there and launches are all stacked towards the later part of the year. So I would say that we will continue to grow in a phased manner, but it could go up and down. So I'm largely focusing on a 3-year plan, in which I think by the end of the 3rd year we should be having an annual sales of more than 15,000 crores per annum. I mean, almost like doubling from what we did last year.
Sure, sir. And sir, in terms of the projects which we launched, in 2 large projects which we launched during the Q4, one is in Birla in Gurgaon and second is in Bangalore. So Gurgaon has got a very strong response. We have managed to sell everything. Whether the Bangalore project response was slightly lower. So can you give us to understand that what was the key reason on our different market responses? Is the market is lower, one market is location is better? If you can elaborate on that side.
What happened in NCR was truly exceptional. Nobody thought in a short period of time of 15 days we could have kind of cracked 3,000 plus booking in such a short period of time. So that was really exceptional. What happened in Bengaluru in Sarjapur is also it's a very remarkable performance in my view, because this has been the highest launch for us in Bangalore. Nowhere in such a short period we have clocked 850 crores plus. All our previous launches, the phases were small, so we did 500 crores or we did 550 crores, etc. But this has been a humongous launch. We clocked 850 crores plus. So from our point of view, I think this has been a very, very successful launch. The time allowed us was just about a week there. So that was the reason. So, I mean, that is, if you may say that it could not reach what was like a 3,000 crore or something like that. But I think it was also a very, very strong response. We almost launched at end of the quarter. Sorry, yeah, Amit, did I stop you?
No, I was just asking that there is no problem with the demand as such, the demand is slowing down.
Demand continues to be very strong. I've always maintained that the right pricing, right location, and combination of right brand, right design, right sizing. I think the market continues to have massive hunger or demand for such kind of products.
Okay. And sir, one more question on related to our cash flows. How would be the cash flow positioning for the upcoming year, considering that we have done a deal of exiting the paper business, so that cash flow taking cognizance as well as the project collection and versus the planned capex on a construction spend, if you can highlight on the cash flow position.
Hi, Amit, Snehal here.
Yeah, sir.
Amit, see, our current consolidated debt stands at 3,575 crores, and roughly our net worth is around 3,900 crores. So the debt equity is around 0.92. Now, post the paper business divestment cash flow coming in, we will have to actually repay close to around 2,000 crores of debt, which is kind of tied in some way or the other the assets of the paper business. So the balance that comes will be held in treasury, to earmark for the future growth capital of RE business. So thereafter, we will of course be having cash flows from the collections, but I assume that also would be eaten up against the construction costs. So major requirement is only for growth capital, and therefore this balance amount remaining from the paper business will be used. And if exhausted, we will probably go for fresh borrowing because our leverage would have improved a lot.
Yeah, so just a clarification, sir. So 3,500 crore.
I'm sorry to interrupt, Amit. If you have any further questions, could you please rejoin the queue?
No, I just wanted a clarification on this cash flow.
No, it's fine because I think most of the others would be also having this question. So Amit, please go ahead.
Yeah. So basically, sir, this 2,000 crore paper debt is included in our net debt of 3,500 crore or no?
Yeah, it is included. No? That's what I'm saying. Yeah. So 3,500 में से 2,000 चले जाएगा.
Okay.
तो जो बचा है प्लस समझो अपने पास आफ्टर कैपिटल गेन्स एंड एवरीथिंग 3,500 करोड़ roughly if you are calculating coming from the paper sale, so 2,000 goes, 1,500 goes, so around 1,200 odd crores will be available to us as in our treasury to pay for any growth that happens in the real estate business. But if it falls short, we'll go for fresh borrowings.
Okay. And in terms of the collection versus construction spend, for this year, for 26, if you have.
Sorry, Amit, what's the question?
So how much is the projected collection in FY26 versus construction spend?
Construction spend, yeah. So we had a very healthy collection of almost 2,706 crores. Construction spend was what? You had a 500 crores supply? About 1,600 crores construction.
Okay.
Yeah.
If you can give it for the FY26 also, sir, what is the projection if you have?
So as I mentioned, you all know that this is largely dependent on sales, and since I'm not giving a number for sales, I don't want to hazard a guess, but I can assure you that it will be a very, very healthy and strong growth in collections also, largely based on our bookings so far and the progress we are making on construction.
Okay. Sure, sir. Thank you very much. I'll have one question. I'll come back. Thank you.
Thank you. The next question comes from the line of Karan Khanna from Ambit Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. Am I audible?
Yes, Karan, you are audible, and thanks for your question. Yeah, thanks for calling out. Yeah.
Sure, Katie. So firstly, Katie, if you can give some qualitative thoughts on the footfalls, conversion, and the booking that you're seeing in this quarter, and specifically on Niara, can you please share the number of units that were sold last quarter? And as a follow-up, what is the outlook going into FY26? Are you still looking at year-end launch for phase 3, or will you look to move it to third quarter?
Yeah. So first of all, as Niara is concerned, we all know that we have launched 2 towers. The first tower, we have sold 401 apartments out of the 414. So it's almost a case of, there's hardly any inventory left. And in Tower B, we sold 96 out of 148. We had a very strong last quarter. We did about 9 or 10 apartments the last quarter. We are at 96. So I think the demand remains steady. Despite that, most of our very prime inventory is sold. The demand remains steady, and we are very excited and looking forward to our launch of the third tower. Most likely, this will happen in Q3 end or Q4, early Q4.
Sure. And in one of the slides, Katie, you mentioned that Birla Vanya is the only project that is expected to be delivered this financial year. Given the kind of growth and the business development that you've done in last few years, will FY26 the focus be towards more of BD and launches, or will you shift gears and focus towards execution of the existing projects?
Thank you, Karan, for this question. So let me tell you that our focus always has been and will continue to be on execution. I think good BD and sales happen on the back of very strong execution. We have delivered 3 projects so far. One is the Birla Vanya in Kalyan, Birla Alokya in Bangalore, and the first phase of Birla Navya in NCR. All these phases have been delivered within the RERA timeline, and has been very well appreciated with a very strong NPS score. It only happens that the timing of it is not it's not happening now. I mean, Alokya and Navya, both this NCR and distinct projects has been completed and largely delivered and profits booked. Vanya, we have some flats yet to be sold, and which for that our income recognition will come in for that residual part for this year, and some part of where customers are not paid fully. There is some more than 80%, more than 20% to be paid. That kind of will come this year. We had not scheduled for any kind of handovers this year. There will be a modicum of handovers from Birla Tisya and a new phase of Navya coming up in the next financial year. And I think largely the big delivery will be of Niara Tower 1 in FY28. So just because there is no delivery in a particular year doesn't mean that focus is not there. If you have mentioned in Mr. Dalmiaji's speech, we have got the Golden Peacock Award for Quality Systems, the only real estate company in the last several years. We have been conferred upon that as a company. So that speaks well about our execution, quality, timelines, everything we're extremely focused on. We are also very proud to say that we have met all our budget costs during this period of time. So I don't think there has been any lack of focus. In fact, there has been extreme focus for us has been execution.
Sure.
Execution and design has been a focus.
Yeah.
Sorry, I interrupted you.
Yeah. No, I think this is helpful. I think thanks for the clarification. My second question on Bangalore, given you've exhausted most of the launches here, barring Trimaya Phase 4, which is expected this fiscal year, what are the expectations on business development in this market for FY26, and any guidance on FY26 business development that you'd like to share overall?
Yeah. So I think we are totally focused on continuing to build our GDV banks because as our sales, as you mentioned, have been very strong, and we have a very strong pipeline of launches lined up for this year. So I think our focus will continue to be in BD. Last year we did GDV added GDV worth about 25,000 crores. This year we are looking at least about 15 to 20,000 crores new GDVs, new BD to be added, and it will be focused in all markets wherever we get the right deals, be it Bangalore, be it NCR, be it Bombay or Pune. Our focus is in all these four markets. Yeah, equally.
Sure. And my last question on Noida Sector 150, any development post the intervention by regulatory authorities, and do you see this project getting added to your portfolio in the next 4 or 5 years, given the complications that are associated with it?
Looks a little dicey because it has not made much progress from where we had during the time we have signed. It's still hanging in balance. So it's 50-50. I'm not too confident about concluding this deal. The agreement expires in some time later this month. So we'll have to evaluate it in a fresh manner.
Sure, this is helpful, Katie. I'll come back in the queue for any follow-ups. Thank you and all the best.
Yeah.
Thank you. The next question comes from the line of Akash Gupta from Nomura. Please go ahead.
Hi, am I audible?
Yes, Akash, you are.
Perfect. Sir, my question was, first question was on the Niara Tower launch. So there is Godrej coming up and then there is also Prestige. So I just wanted to understand your plans for the Niara third phase. Like how will this tower be different from the first two phases? Are you planning to change dimensions or anything? That's my first question, sir.
Okay. So Akash, the competition has heated up in this region. There are a lot of very high-end apartments coming around in this micro market. However, our traction, as I mentioned a little earlier, has been very strong for Tower B. But it's always good to bring in something new. So we are still in not in a position to disclose that, but we are bringing in a changed format for Tower C.
Mm-hmm. Okay.
Yeah.
Okay. And my second question is respect to the Mathura Road project also. So what is the status of that project? And my third question is with respect to Sarjapur. So we launched that in the fag end of the quarter. So can we expect the balance Sarjapur sales in this quarter of the financial year?
Okay. About the India Hume Pipes project, Mathura Road project in Delhi, unfortunately, it is still stuck in the approval stage. We've not been able to make much progress there. We need a standing committee to be appointed and the project to be cleared by that. We were hopeful with the new formation of the new government, this will speed up. Unfortunately, it has not happened. We have not taken it in this year's launch calendar also, but we are trying our level best to sort of get it going. The good part is that because being a JV, there is not much capital locked in it, hardly anything. However, our efforts are full on to because we think it's a very attractive and very strong market, and all efforts are going on to circumvent the challenge that you're facing. So that's about India Hume Pipes project. Sarjapur, yes, we are. It was launched the fag end, and we are expecting sales continues to happen. The only thing is that the new phase, the team, the challenge, the channel partners, recoup is happening at the beginning of the new quarter. But I think that sales continues to happen, and we expect a reasonable amount of traction continuing in this project.
Understood, sir. Best of luck for the new financial year, sir. Thank you so much.
Thank you, Akash.
Thank you. The next question comes from the line of Pritesh Seth from Axis Capital. Please go ahead.
Yeah, thanks for the opportunity. First question, continuing on this Sarjapur. So it mentions that we have launched it fully, but it seems like we didn't open much of inventory. So just wanted to understand how much we opened to have this 860 odd crore kind of a sales there. And yeah, I mean, you can answer that and probably then I'll take my second question.
Yeah, I think barring 3 towers, we opened 4 towers at the beginning to just focus on that because time period was very short. So right now we are focusing on those, and once we get reasonable volumes there, we will expand into the others, open up the other towers also.
And 4 tower would have value in terms of GDV of 1,000 crore or more than that? Or
Yeah, I think I don't have that number here. We can take it on. I think about 1,500 or something. How much is it? Yeah, I think closer to 15. But I'll have to come back to you. Maybe we can give you those numbers offline. The first 4 towers. In Sarjapur.
Okay. And just trying to understand the cash flow details that you have given, in slide 34. So we did a project development cost of around 6,000 plus crores, and you mentioned earlier that 1,600 crore is what we spent for construction. So rest is the FSI purchase that we did. That's the right understanding?
So it includes BD and it includes
I think major one other than construction finance, it includes BD cost of the projects that we have acquired. A significant part of that, about close to 1,300 crores, is towards the Worli acquisition, 10 acres of Worli acquisition, and we can give you a breakup of the other costs. Katie, do you have the other costs other than project or something?
Yeah. Other costs.
Yeah, roughly that is where rest is. 2,000 plus what do you call it? Construction. How much we spent on construction?
1,600 is what you mean.
We spent 1,600.
1,600 plus 30. So that is close to 3,000 crores, right? And balance 3,000 is for the other projects that we have acquired.
Okay. So basically, it also includes the BD cost that we have incurred. Yeah, that's what I wanted to understand. Okay.
Yeah.
Okay. And just one last on the launches slide, you have given GDV estimate of 26. This, I suppose, also includes the inventory which is there in the project, or 14,000 crore is all new projects that we are looking to launch?
So 14 is the new launches plus the sustenance inventory is also there. This is just the new ones we are bringing to the market.
Okay, fair enough. Okay, thank you. That's it from my side, and all the best. Thank you.
Thank you.
Thank you. The next question comes from the line of Hitesh Doshi from Nirzar Securities. Please go ahead.
Yeah. Good morning to everyone, and congratulations on great sales of great sale numbers.
Yeah, thank you.
Yeah. So my question is, what is the sustenance inventory as KT said just?
Roughly about 6,000 crores, sir.
6,000?
6,700 crores.
So in a way, you will make projects available worth 20,000 crore in the entire next 12 months.
That's right. Yeah.
Okay. And how far we are from receiving money from the ITC deal, or there may be some negative surprise over there?
We don't expect any negative surprise as of today. It is why we expect the closure to happen somewhere by end of July, and maybe at the most a month or so if it happens in July, then a month or so to receive the money. So hopefully in August we should be closed. So there can be no negative surprises other than maybe slight delay in the closure of the deal.
Okay. We have 20,000 crore worth of goods to be sold in current year, which will be launch plus inventory. So we should be hopeful of at least crossing what we have done last year.
No comments, Hitesh bhai.
Okay. Wish you all the best, sir.
Thank you.
Thank you so much.
Thank you. The next question comes from the line of Dixit Doshi from Whitestone Financial Advisors. Please go ahead.
Hello. Thanks for the opportunity. So my first question is, in our earlier interactions, in some of the calls you have mentioned that, the Worli project, the cost of construction is around 20,000 rupees a square feet. And broadly, wanted to confirm this is on a sellable area you mentioned, or it is on a carpet basis?
So I have always mentioned costs on saleable areas. Yeah, I had not mentioned 20. I said in the region of about 25,000. starts 20, then it may go up by the finished project gets included into about 25,000.
Okay, so 25,000 so 25,000 rupees approx cost on sellable, whereas the realization would be up around 80,000.
No, I said realize. See, I think what I have said always is that by the time we complete this construction over the next 6, 7, 8 years, we would achieve a average price over 50,000 rupees and a cost approximately about 25,000 rupees. Maybe including all inflation. So we should get close to about 50, maybe 45 to 50 margin. That's what I've maintained.
And when we say this 25,000 rupees cost, so entire cost, this will include marketing and everything. So this entire cost will come when the revenue recognition will happen, or some of these cost is even recorded currently because we are showing losses in the current quarters.
So Dixit, what happens is there is certain cost, of course a significant cost is always put in work in progress, but there are certain launch costs, launches costs, advertising costs, etc., which we incur during the year for all the launches. So those costs get written off in the P&L account. So you will see a large portion because we had a lot of launches in this year, particularly in the last quarter. So therefore, we had a significant amount of expenses which we had to charge to the P&L account, and that is one of the reasons why we have a little softer EBITDA margin. So all these recurring, launch costs, etc., those things are written off in the P&L.
Okay. And one last question. We have given 9 projects for FY26 planned launches. If you can give a GDV-wise the different projects.
So I think, I can name which are the projects. GDV project-wise will take a lot of time. We can do it offline. We are doing a new phase of Birla Trimaya, a new 4th phase. In Mumbai, we are going to do the first phase for our Thane project, which is signed with Hindalco. New tower in Birla Niara we are planning to launch. We signed a large project, plotted development in Boisar near Mumbai, which also we are planning to launch. We are planning to launch 2 phases in Pune, Birla Punya, which we launched the first phase in March. We are hoping to launch 2 more phases there. Then the other project in Pune, which is located in Manjri, we are planning to launch that too. So there will be 3 launches in Pune. In NCR, Arika phase 1 is literally sold out. So now we are gearing up to launch the next phase of Arika. And the new project which we had signed last year in Gurgaon, which is Sector 71, so that also we are planning to launch.
Okay, and recently there was some regulation regarding the NGT approval. So they've mentioned that around the Vikhroli Thane area, the NGT will require. The environment clearance will be required from central government. So can that impact our Thane project?
Yeah. Our projects we have applied to central government. Our project has come under that. That's why it has got little impact. Otherwise, we would have planning to launch it last financial year. So we have applied to Delhi for our clearance.
Okay, fine. That's it from my side.
Thank you. The next question comes from the line of Siddhant Chabra from Mindvera Asset Advisors. Please go ahead. Siddhant, please go ahead with your question.
Hello.
Hello.
Yeah. Thanks for the opportunity. My question is, I know that we have divested the paper and pulp business, but I just have a small question on some intricacies there. Firstly is regarding the wood price. I've seen that in the presentation there has been a decline by 6% quarter on quarter and as well YOY. So what is the kind of expectation? I know that we have divested it, but some kind of expectation of this price going forward, maybe over the next 6 to 12 months.
So right now, we particularly on the pulp and paper business in terms of input price as well as imported pulp price, we expect it to stabilize, but we don't expect it to come down drastically.
So any range you could provide, possibly what your expectation would be from here?
It will be difficult to provide a range at the moment because you see the markets, they are all volatile. So it's very difficult to predict right now. So what we can only do is keep a close watch, and if there's some significant change, we can look at market correction of our realization.
Okay, so we are expecting some further downward movement in input prices like food and pulp.
Yeah.
Okay. And secondly, I wanted to ask regarding the market outlook that you've written in the investor presentation. There is increased competitive intensity from Indonesia and Thailand. So this would be in board and tissue, or it could be in the uncoated paper as well?
Mostly in board.
Okay, this is mostly in board. And is this expected to, in your understanding, is this expected to continue be a factor throughout the year going forward, or is this maybe a short-term kind of headwind?
It's expected to continue. We are talking, the association is talking to the government to have some sort of a minimum import price and what do you call it, even the anti-dumping, etc. So let's see how that progresses.
Right. I just had one small thing. It's a data point that I would need. So maybe if I could reach out to you post the call. But I just wanted to know in terms of the input price by area, what the kind of wood price would be by area. So, I mean, if you would not have it now, I could possibly reach out to you after the call is done.
Yeah, please reach out.
Okay. Thank you.
Thank you. The next question comes from the line of Amit Aija from AG Hawa. Please go ahead.
Yeah, good morning, sir. Am I audible?
Yeah, you are.
Congratulations, sir, for blockbuster sales.
Thank you, man.
So my question was regarding to the Mitsubishi tie-up. Like you have raised 275 crores. So like, is it a JV or like a loan taken from them?
No, it's not a loan. It's an equity participation by them.
What will be our share?
So 50-50 here, 51-49. 51 is ours, 49. So it's like a platform sort. It's not a platform. It's a project level investment equity participation. Structuring is done in a certain way, but actually it's a 51-49, and we get 6% DM fee. 8% DM fee. Yeah.
And some promotion. Sir, one more question was like, can you share some outlook on EBITDA margins for your FY26?
FY26, there is no launch. There's no handover happening up. So there will not be too much emphasis on EBITDA. Collections are going to be strong. Sales we're focusing on, but the bulk of the EBITDA will happen in the future years. We don't expect much of EBITDA because of the way the project completion method booking is accounting is done. We don't expect too much of EBITDA to come in FY26.
Thank you for answering, sir. All the best for the future.
Thank you, Amit.
Thank you. A reminder to all participants, please press star and 1 to ask a question. The next question comes from the line of Biplab Debbarama from Antique Stock Broking. Please go ahead.
Good morning, everyone. Good morning, KT sir and Snehal sir. My first question is on regarding Pune projects. So Pune is a new market to us. So my understanding is they have launched the first phase in Pune of around 400 CR. So how is the response and how is the Pune market when you compare to say Bangalore and Mumbai and NCR market, that where you have done exceedingly well. Compared to that, how is the Pune market, and how is your response regarding the first phase of Pune launch?
Thank you, Biplab. So again, the story of the last quarter has been that most of the launches was stacked up towards the end of the year. Of the 400 limited inventory that we launched because of certain approval changes which happened in the Pune development rules, we could launch only 400, but we sold 75% of that inventory. So it has been a very, very strong response for us, and we continue to expect that kind of response in our upcoming launches in Pune.
And about the market, sir?
Market is very strong, holding very strong. I think it's a very resilient market, very strong demand. Much like the Bangalore market, it is the third largest market in India, and we are very bullish about this market.
And second question is on the deals. I'm sure you are getting a lot of deals and producing all the deals, analyzing all the deals. But if you could give us some insight, in terms of deals in the next few quarters, do we expect a few large deals or something that can be closed?
Yeah, I mean, at any point of time, we have a certain amount of term sheets signed, and we are looking at converting them. We are also attempting to convert something this quarter, lots of them in the coming quarters. We are also now largely focused on getting the redevelopment deals in Mumbai. So making good progress there. Hopefully, either in this quarter or maybe next quarter, we may be able to announce our first, successful. I'm hoping to do that. So I'm expecting maybe we may do something this quarter, or it may spill over to the next quarter. But I think we have a healthy pipeline, and we expect to close some good deals very soon.
Sir, a third question and final question. Since you broached the topic of redevelopment, most of the Mumbai developers, all the reputed developers, most of them are focusing. They are also focusing on redevelopment projects. Do you see a lot of supply from redevelopment project itself, or there would be stiff competition in redevelopment projects amongst the grade A developers? How is the redevelopment market? Is it really happening at a faster pace?
I think South Mumbai is really opening up because of the infrastructure development and connectivity, which has substantially improved towards that area. There is increased competition in that market. Top developers are all aiming to do that. However, I feel there is enough room because the size of these are relatively much smaller, so the inventory which will come out of each of them will be limited. But I think one can create a strong market share positioning there, and then trust plays a very significant factor. So I think we definitely have an edge over there, and that's what we are seeing also. We are experiencing that. Our brand works very well. Brand equity works very well in that segment.
Thank you. Congratulations and all the best, sir.
Thank you. A reminder to all participants, please press star and 1 to ask a question. Participants may press star and 1 to ask a question. The next question comes from the line of Amit Srivastava from B&K Securities. Please go ahead.
Yeah, thank you for the follow-up. So just one clarification we are looking for. You had mentioned that Birla Niara, the per square feet cost would be around 25,000 rupees. So just wanted to understand that what are the costs we are including in that for that 25,000 rupees?
All costs. We're including almost all costs. It's a development cost of land, cost of premium FSI, overheads, marketing and sales costs, of course the construction costs, approval costs, design costs, overheads, inflation, material inflation, all of that.
Okay. Sir, next is in terms of one clarification related to our provision, which we have done for around 114 crores for our JV in Birla Advance Lease, I think. So considering that we have a equity investment of only 5 crores in that business, and we have recently commissioned that project. So what is this pertains to this liabilities of more than that? It is operational liability or any other item which has done?
Sorry, I'm really here to push a line. Need to add 114. Yeah. So basically, the JV which we had, that JV was depended a lot on our existing textile business, which used to supply yarn to it, as well as certain utilities were shared. But post closing of our textile divisions, it became unviable for the JV also to continue. So we have to now therefore decided to sell the JV away, and we right now have estimated its liabilities to be in the region of close to around 228 crores, etc. So both the partners will be contributing equally to that particular liability. Also, we already have 50 crores of capital, so we'll have to invest another 89 crores each into the JV. So that particular 89 crores is what we are considering as a provision. We have already accounted for a loss of about 8 to 9 crores in the first quarter. So the net amount that we have to provide is about 81 crores. And the second, so if you see the number of 124 crores, so 81 is this, and the next 43 crores is with respect to the carrying cost we had of the property, the Worli lease land, which is now, as per the Supreme Court, we have handed it over to the BMC. So we have to write off that particular carrying cost of that particular property. So these are the two major exceptional items. So 81 plus 43 is 124 crores is what we have provided. Hope that helps.
Yeah, sure. Thank you for the clarification. That's it from me.
Thank you. The next question comes from the line of Akash Gupta from Nomura. Please go ahead.
Hi, sir. Thank you for taking up my follow-up question. So, with respect to our launch guidance of 140 billion, sir, do you think there is any downside risk to this launch guidance? For example, we are waiting for central government approval for that Thane project. So, my first question is, how confident are we of this 140 billion launch guidance?
Akash, see, we are, at this point of time, we are very confident and quite positive. All of this is going to happen as we have planned it. But seeing approvals, things do crop up, and it may get more jacked up towards the last quarter. There may, theoretically, some of them may get spilled over to the Q1. As of today, there has been no such sign. But in approval thing, you can now be, totally be assured it will happen in time. Everything is progressing as on plan as of today. So we expect all of them, and you're fairly confident. But it's possible that some of them one or two of them may got spilled over to the following quarter of the next year. Having said that, Akash, I wanted to do one clarification. Akash and Pritesh, both of you had asked for about Sarjapur, how much we launched, etc. So I said, 4 towers, but actually it's 4 blocks which have launched. 4 blocks each block is of 2 towers. So we have launched about 7 towers. And what we have balanced, we have kept for a later launch is 6 towers. The overall is 13 towers divided into 4 or 5 blocks. So I wanted to give that clarification.
Okay, I see. Because in the PPT for Sarjapur, we saw that I think the entire project was launched. That's what the PPT showed for the Sarjapur project.
So, Akash, you're right. We have one RERA number for the entire 13, one RERA. We are planning to launch the whole thing. But being it, we decided to focus more to maximize our revenue, etc., on the first 7 towers because of the paucity of time as the RERA came in at a very late stage.
Okay. And one final question from my side. So what was the project level EBITDA margins for the fourth quarter revenue that we booked?
Around 25%, 25 to 20, between 25 to 30%, 33%, depending on various projects. I think our NC project had a very high margin. So Kalyan being where it is, the pricing Kalyan had a lower margin, but that's the range.
Understood, sir. Great. Thank you so much, sir.
Thank you. The next question comes from the line of Ronald Cion from ICICI Securities. Please go ahead.
Thank you, sir, for the opportunity and congratulations on great set of numbers. Actually, I had a query on the business development guidance which you had given about 15 to 20,000 crores. Does this include redevelopment projects? Because redevelopment projects will not need much of the capital. And another related question would be, are you being a little bit conservative considering, generally around 10% of the land cost is there and you will have about 1,200 odd crore to invest in the coming financial year. So this BD guidance, is it conservative?
Yeah, I think it's realistic. I would like to say, as I said, our approach towards new deals is a little conservative in terms of what I've always mentioned is that we don't take any risk other than the market risk. We're very particular about location, title, access, zoning and all that. So, even the land prices, the micro markets we choose, the kind of, competition there is. So from that point of view, we are a little more choosy about our BD deals. This also includes the new segment that we are planning to enter, which is the redevelopment sector. Having said that, I think, funding has been never a constraint. So I think we are reasonably confident that we should be able to achieve this.
Yeah, thank you. And last question would be, on your 3 years target of reaching 15,000 crore annual pre-sales. But as you are, your overall vision is to be in the top league of the developers. And what we are currently seeing is that, local, unlisted, but organized players are also, moving at a very fast pace and trying to cross 10,000 crores of pre-sales. So, how does you stack up versus, organized and unorganized large players in terms of your overall vision of being in the top league?
Yeah, so I think what we are talking about is almost like doubling our current booking in a short period of 3 years. So I think that stack up very well. We've been growing pretty strongly. We also have to take the cycle into consideration. We have been going through a very, very strong cycle. We have to assume that the cycle will continue in the same fashion. Market is definitely tuning more towards more organized, branded corporate players who are more committed on execution and quality of delivery, timely delivery also. So I think we are very well placed, and we are very well placed to take advantage of this. And I've always mentioned that we want to grow proportionately, with it being most customer-centric as well as the most reputed developer. So we won't be going too aggressive after signing new deals. We are very choosy about the deals because real estate is a multi-year cycle business. So we have to be careful about that. We have to be prudent about growth. So we'll take our time to grow, but we are very confident given the opportunity, given the brand, given the kind of skills we are building up in our team, etc. I think we will be on a very robust growth path.
Thank you very much, sir, for answering the question and best of luck.
Thank you. Participants, please restrict yourselves to 2 questions. If you have any more questions, kindly rejoin the queue. The next question comes from the line of Sagar Shah from Fin Research. Please go ahead. Sagar, please go ahead with your question. Since there's no response from the participant, we'll move to the next participant. The next question comes from the line of Isha Shah from Nirzar Enterprise. Please go ahead.
Good afternoon, and congratulations on a good set of numbers in NCR and Bangalore. I'm audible, sir, right? Hello?
Yes, please go ahead with your question.
I'm audible, right?
You are.
Yeah, okay. So I have two questions. First one, in financial year 25-26 and 26-27, how many and which projects will be getting completed and delivered? And second question, in financial 25, projects that we have added,